Hello and welcome to Explain the Charts. Today we are analyzing SPI on June 11th, 2025. We're going to look at the latest news and how it correlates with our chart data. Recent news suggests optimism surrounding U.S. China trade talks is driving the market higher, with the S&P 500 nearing record levels. However, the upcoming May CPI report is looming, creating uncertainty about inflation and potential Federal Reserve policy. We need to carefully evaluate whether this rally is sustainable. Let's jump into the charts and see what they're telling us. Looking at the daily chart, we can see a clear upward trend in SPI over the past several months. We see SPI bounce from a low of approximately 505 in early April up to approximately 530 by late May and up to around 537 by today. Notice the consolidation around the 530 to 537 range before a breakout. Given the news of the U.S. China trade talks, we see the possibility of breaking the 614 all-time high if talks progress smoothly. However, the opposite could happen if the CPI report comes out unfavorably. From our daily chart, we can estimate resistance to be around 614 and support around 505 and 530. Let's look at the 1-hour chart. Switching to the 1-hour chart, we get a closer look at the recent price action. We see the U.S. China trade news pumping the index in the last couple of weeks. We can see more clearly the 600 price level is now acting as support. Zooming in on a specific range, let's examine the candles from June 3rd to today, June 11th. This period showcases the market's reaction to the positive trade talk news. I'll mark those specific candles now. This should help us make better trading decisions. On the 1-hour timeframe, observe that the price is showing more sensitivity, especially in regards to that 600 range. Currently, it seems that the market is leaning towards a bullish outlook due to the trade talk news. However, watch for any reversals if the CPI report surprises to the upside, which could signal bearish momentum in the short term. Short-term support can be found near 599 to 600, while resistance is around the recent highs near 603 to 604. Let's move on to the 15-minute charts now to analyze short-term opportunities. Looking at the 15-minute chart, we can get a better sense of the intraday volatility and potential entry and exit points. We see more noise in this chart. On this chart, there are possible day trades using support and resistance levels, or if we see breakouts from these levels. Watch for potential breakouts above 604, but keep an eye on the CPI report. Currently, the S&P 500 is approximately 2.3% away from an all-time record high, as mentioned in the news. Zooming in even more on June 10th and 11th, this range shows the latest consolidation with finer detail. The data shows that the index is grinding towards its recent record highs, so any positive news can definitely help it make its way there. However, the looming CPI report is a constant threat to this positive sentiment, so be careful. In summary, we are approaching all-time highs. A break above 614 is definitely possible, maybe at a 40% chance, if China-US trade relations are great and CPI reports are neutral or under expectations. As always, trade carefully and manage your risk appropriately. Good luck, and thanks for watching Explain the Charts. Remember to subscribe and hit that notification bell for more in-depth chart analysis. Major key levels to watch are 505, 530, 599, 600, and 614. Thanks for watching.